you ever see a rocket take off, hesitate mid-air, then slam the boosters and vanish into the clouds? Well, that's exactly what Bitcoin just did, and the tower control log hints it might actually punch straight through the stratosphere before Christmas. Now, stick around because the flight path ends somewhere north of $200,000, and I've got the cockpit recordings to prove it. Now, I'll admit, 2 weeks ago, I was half certain the market had hit cruise altitude. BTC at $118,000 felt rich. My coffee kind of tasted a little bit bearish even, and even experts on X were suddenly kind of talking altcoins. Then I stumbled onto an obscure chart from an analyst who hides behind the handle APSK32. And of course, my draw, that did the cartoon drop thing. Now, their power law time contour model kind of shows Bitcoin running more than 2 years ahead of its long-term curve, and historically ushers in those euphoric 4-year blow-off tops. The translation? Well, if this pattern sticks, we're going to be talking $200,000 to $300,000 by Christmas Eve. Now, I've been around since Mt. Gox was a toddler, so moon math doesn't impress me much. But this curve isn't your garden variety rainbow chart. Instead, an eyeballing price versus time. It kind of measures how many months Bitcoin is ahead of schedule. Now, right now, we're kind of 79% into historical extreme greed territory. This is the financial equivalent of kids piling into a trampoline until the springs squill. Past cycles, 2013, 2017, and 2021. Each one exploded roughly here and peaked in the top 20% band. Cue my problem. How do you decide whether to hodl, to trim, or even to double down when the data whispers $258,000 is statistically normal? Now, your kind of lizard brain still kind of remembers 2022's ice bath, right? So, did I do kind of what any reasonable degen does? Well, I did. I spent a weekend arguing with spreadsheets, rerunning the numbers, and because misery loves company, dragging my friends in our free educational Discord server into the rabbit hole with me. The link for that is in the description. You enjoy late night charts apocalypse if you want to. Now, we discovered something pretty wild. If Bitcoin simply parks at today's $118,000, it would take more than 2 years for the power law trendline to actually catch up. Now, that's kind of like standing on an average sidewalk that's accelerating behind you. Eventually, the belt kind of slingshots you forward, unless, of course, you sprint in reverse. And guess what? Macro forces are greasing that belt. The dollar index teasing a drop below 100. That's the kind of starter pistol for a Fed pivot towards rate cuts, and fresh stimulus, exactly the risk on Kool-Aid that Bitcoin loves to chug. Rails Exchange's CEO, that's puts a kind of bluntly, or put it rather bluntly, and he says, I see Bitcoin going parabolic into the $300,000 to $500,000 range. Bold? Absolutely. But let's zoom out. Since January, Bitcoin, at least spot Bitcoin ETFs, they have vacuumed up 70% of gold's net inflows. Institutional money, it isn't just nibbling, it's actually devouring. Fidelity's, Durin trimmer, even kind of highlighted Bitcoin's Sharpe ratio sprinting to catch gold's. So when a 15-year-old digital asset starts outrunning a 5,000-year-old rock on risk-adjusted terms, something fundamental is shifting. So, picture 2 marathoners, right? Gold is the kind of stoic veteran pacing mile 22, right? Then steady heartbeat. Bitcoin, of course, is the kind of brash rookie who sprint walks, stumbles at, mile 8, gulps an energy gel, then rockets past wearing neon shoes. Right now, they are actually side by side, and history suggests that the rookie still has another turbo in the tank. So let's come to the twist then. The euphoric tops, they don't feel euphoric when you're living in them. They actually feel obvious in hindsight and terrifying in real time. Remember April 2021, Coinbase's IPO? Laser eyes on every kind of profile pic, right? And your dentist asks how to stake Doge. Now, folks, they kind of thought that they were late. It turns out that they were actually early to the kind of crash, of course. Now, that's kind of why the phrase is tricky, right? You must manage emotions as ruthlessly as you can manage your capital. Midway kind of through piling these kind of threads together or pulling these threads together, I had to kind of pause and record a quick voice memo so that I'm not going to kind of drop them verbatim here, but let's go and get this sorted for you, right? Because it might just shock you that I am not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely, guess what? Your responsibility. And nothing is ever guaranteed when it comes to investing, right? Neither I, this channel, nor YouTube are going to be liable for any losses. And this video today is purely for entertainment and educational purposes only. All right then, let's get back to the story because by Sunday night, my brain kind of felt like a GPU mining chai, overheating on exotic math. So I kind of stepped away, made some noodles and scrolled ETF flows. And that's when another puzzle piece kind of clicked in. Gold historically hoovers up capital when investors fear policy mistakes. Yet in 2025, gold's share is actually shrinking while Bitcoin steals the spotlight. So let's think of it as kind of the baton pass at maybe a 4x 100 relay, right? The precious metal anchor just handed the aluminum tube to a teenager wearing Lightning Network spikes. And into that, the Nasdaq correlation hovering at a moderate level, and you kind of get a hybrid beast, right? Bitcoin participates in tech rallies without mirroring gold or bonds, and that diversification superpower is exactly why Wall Street allocates, and even if they will kind of still kind of sip decaf and call blockchain cute. But models and macro only set the stage. The climax kind of hits when retail FOMO collides with shrinking supply. 4 halvings have kind of timed block rewards, or at least trimmed them, I should say. And the kind of last one earlier last year, I should say, cut issuance, to what amounts to a rounding error on Tesla's cash balance. Meanwhile, of course, spot ETFs swallow thousands of coins per day, right? Picture draining a lake with an industrial pump while the inflow from a mountain kind of spring slows to a trickle. Sooner or later, fish are going to be flopping on the mud. Now, I saw the first kind of splashes last Thursday. My phone kind of pinged and BTC was up 4% in an hour, volume spiking and memes of Santa riding a rocket littered my feed. That is kind of when it dawned on me that this Christmas rally narrative is actually getting sticky. Markets run on stories after all, and a countdown to $200,000 wrapped in holiday cheer is the kind of myth that drags cousins at Thanksgiving into the opening opening a Kraken Pro account. And of course, speaking of which, if you're planning to trade through all of this madness, then my Kraken Pro affiliate link is down below. Clicking it supports the channel, and full FTC transparency might earn me a coffee or two while you chase those sats. Anyway, I couldn't resist, so I pulled up an old spreadsheet from 2021, back when $69,000 kind of felt like nosebleed highs, and adjusted the power law inputs. Now, the curve that once kind of intersected at $150,000 now screams past $250,000. Now, that doesn't guarantee that we touch it, of course, but historically, Bitcoin either tags or overshoots that band before collapsing, a bit like a Jenga tower missing crucial blocks. Now, the trick is, of course, trying to time your exit before the blocks wobble. Now, here's the uncomfortable part. Now, you won't get a calendar invite for the top. Instead, you're going to notice absurd things like TikTokers flexing screenshots of 100x leverage gains, billboard ads promising risk-free yield, normie friends suddenly bragging that they're early when Euphoria oozes out of places that it doesn't belong. Now that is your cue to review your plan, set trailing stops, and maybe take your original capital off the table. Until then, I'm kind of approaching this run a bit like a surfer eyeing a monster wave. I'm going to paddle early, I'm going to stay balanced, and I'm not going to panic if the board wobbles. And I'm always going to respect the ocean. Now I keep a journal of objective signals, DXY under 100, Fed minutes hinting at cuts, ETF inflows accelerating, and my personal favorite, Google Trends for how to buy Bitcoin. When those curves go vertical, your uncle probably mortgaged shopping his house for dry powder. Now, here's a quick anecdote. During the 2017 mania, I hosted a poker night. Halfway through, chips forgotten, every player was refreshing CoinMarketCap on their phones. That was December 17th. The exact day that Bitcoin peaked at $19,800. The same vibes in April of 2021 when my gym buddy asked if Doge could hit $10 tomorrow. Now, these micro moments are emotional thermometers, often more accurate, in fact, than the fiscal oscillator. So, where does that leave you and me? Well, if APSK32's model holds true, then we should expect a vertical ascent into the extreme greed zone, $112,000 up to $258,000. And possibly an overshoot towards kind of moonshot 300k territory. The window, roughly the next 5.5 months. Will it be a straight line? Absolutely not, right? Think staircase made of greased marbles, right? Each step up kind of invites profit-taking dips and shakes out any weak hands before the next leg fires. And so my plan is pretty simple. First, I keep stacking small buys anytime fear returns, tiny enough that I can sleep at night if it dumps 30%. Second, I'm going to set incremental sell limits starting at around $180,000, paired with alerts on our Discord so that our community can roast my decisions in real time. And third, of course, I remind myself daily, greed is not a strategy, discipline is. And so if you've made it in this far, high five to you, because you now understand the curve, the macro tailwind, the ETF fuel, and the psychology that glues all of this together. Whether Bitcoin tops at $190,000 or $310,000, the lesson is timeless. Markets reward preparation over prediction. Learn the mechanics, track your emotions, and surround yourself with folk who actually challenge your bias. Our free educational Discord is perfect for that, so pop in, show me your favorite chart, and tell me why I'm wrong. Now, before I dip, one rapid fire takeaway reel then. Bitcoin is sprinting 2 years ahead of schedule. The dollar's wobbling, rate cuts are lurking like plot twists, spot ETFs are now gold's rival, and the power law model suggests Santa might deliver 6-figure presents, right? Manage the risk like your future self is watching because, spoiler alert, they are. And guys, why don't you hit that subscribe button so you don't miss me face planting on live camera if this model breaks tomorrow. Otherwise, of course, you can click that video right there and I'll see you in the Discord.